Damn, I just recorded this recap like 20 minutes, but the audio is weird. I don't know what happened, so I'm just gonna redo it. So let's go over the narrative for like bearishness. So coming today on, if you just look at indices alone, you can't really tell that's gonna be bearish necessarily, because when I look in this daily candle, there's no reversal, right? Look at this consolidation on all markets, consolidation, consolidation. We do have SM2 to RTY, right, with this high up here on the daily time frame. But again, no confirmation to that. So you would think that we'd have to resweep the high, which I would too. Like that's what I would be demanding, right? So I can't catch the high of day here, but we can start to think that um, we could see bearishness. So here's why. I haven't talked about this too much, just a little bit. I've been talking about it a little bit more, but you guys can look at these other markets, and it can help you gauge where indices can go, right? So if you look at gold and silver, is that gold had already started to move lower, right? It's already started to move lower. You look at silver yesterday, right? It's already started to expand lower. Look at indices, right? Have not expanded lower. They're supposed to be trading in the same direction typically, okay? Um, Now, the oil is what gives it away because this is what is really obvious here. So we talked about this yesterday. This is extremely clean framework to go long here. We marked out the current weekly range from Monday to Wednesday's high. You can see that this asset had not taken out Monday's low. But if we go to RB, it has, right? So that in itself is advanced premium discount, just using the current weekly range. And you have this two-stage SMT. So notice how this asset closes bullish when it took this low out over here. We did not take that low out. And we close bearish, right? There's your strength switch. And I already talked about this SMT being low probability. Right? This two-stage is like pretty low probability, right? It's because it's not with a relevant level. It's in premium of the range. Like look where this asset is. It's in premium of the range. That's not where we look for a reversal to happen, right? That's where a retracement's happening. And where do we cap off SMT? Or where do we cap off retracements at relevant levels, right? In this range, there really is no relevant level though, like in this whole range. Literally the only relevant level in this case would pretty much just be the current weekly low, really. So you're kind of just looking for a swing points to confirm that retracement is over, and then we can trade the continuation, right? So if we can anticipate Friday on the oil triad to be bullish, then what does that mean for indices? They should be bearish because they move typically in the opposite directions. Now, not always, like not every single day, but typically that's the case, right? And we already see metals has already started to move lower, okay? So this makes sense. This move lower can make a lot of sense, right? Although I didn't capitalize on it because this is dog shit, in my opinion. Like, this is the daily open. It just opens up in dog shit price action. So there's really nowhere to go. There's really nowhere to, like, enter from, in my opinion, right? Or not for me, at least, the way I trade. So now it's just about when I come to my session, is there a target open for me to basically trade to, right? That's the number one thing, really, is drawing liquidity, right? If you have no target, then what are you trading for? That doesn't make any sense, right? So number one thing is target. So when I come to charts, I come to the charts pretty late. We're going to talk about this potential entry if you were trading around 10. So I would be still bearish here, right? Because we have this low available. You can obviously see that if we just mark out relevant lows within the weekly range, you have the weekly low here, the weekly high. Now, internal to that, you have this relevant low and this relevant low. I mean, you can also mark this as well, honestly. But if I go to the 4-hour chart, this is a swing low and that's not. So it's really just these two lows that I'm really main concerned about. And obviously we failed to manipulate this low. So if you fail to manipulate this low, you just place way through it and we come in close proximity to this other relevant low. Right now we're creating failure swings, right? So, you know, if we're not going to manipulate this low, then where are we going to go? Probably next low, the next relevant low. That's what I'm thinking, right? So although this daily candle is very large, very overextended, we still have a drawn liquidity. So it makes it okay to trade. You can see these previous sessions have expanded. If I mark out, I haven't used this indicator in a minute, but you can see Asia and London pretty much expand. So we want to see a New York retracement. This is what you really need to see, is a New York retracement. And here you have one that is like not bad, right? You have this manipulation here with this high here. If you go on YM, it's kind of like advanced pre-discount a little bit, right? This has it's like space out SMTs. So this is looking not too bad. I'm not a big fan how YM didn't do this though. I wish it swept out this high, right? But you're gonna see there's a strength switch PSP, so I would actually probably take this, right? So obviously you're gonna wait for this candle to close. So this is a expansion candle here. You're gonna wait for this next candle to close. Trade this one here. But if you look inside of this, well, I guess, hold on. This happened at, yeah, okay, this is actually weird now, actually. Now that I think about it, this is actually kind of fucked. Because you could wait for 1030. So here's 1030. You want to wait for 1030 because of the 9 AM candle, right? This 9 AM, 90 minute candle, super large wick. But even if you wait for 1030, the 1 hour wick is really large. So, I mean, and there's still 30 minutes left. I don't know. It's kind of like discretionary here. But what I did like about this is there's obviously a strength switch PSP here, right? So you have a bearish candle, you have a bullish candle. Again, I kind of wish we swept this high up, but it is what it is. So it's like, it's probably like a B setup or something like that. It's not A plus or anything like that, but it's all right, right? I like this V shape away, and you guys know I like to enter the first like reversal signature. This is a reversal signature to me, regardless of the like no type of CSD. Dude, the CSD's way down here. So this is the next best thing you're gonna get. It's like a V shape enter from the gap. That's basically your reversal confirmation is the V shape. So 1030 opens up right here. This next candle. So you're basically anticipating open, high, low close. The 15-minute PSP is the confirmation to this. So I obviously didn't take this because I woke up hella late. I woke up late as shit. But I would have taken this probably. Like, it's not that bad. And we do retrace very high in this range, which is not great. Like, you don't want to really see this. You see this right here? You don't really want to retrace up into OTE here. So this is not the best thing, but you'd already be in the trade, or I would already be in the trade. But I would not be entering this here. Right? This is what I would not be entering from. Because of these reverse signature, it's not that great, right? Look right here. Look at this 15-minute candle right now. We want this next 15-minute candle to technically expand lower, right? Not this deep ass retracement. Now, this is not even a valid candle 4 here, right? Because this one didn't expand away, right? So this is like not great reverse signatures. Like, look at it, guys. But you'd already be in the trade. That's the thing. So this is how you would manage, how I would manage it. Once we get the CSD here, secondly, this one, automatically move your stop loss from here. This goes back to my entry stream. From here to here. Or automatically move it from there. Now you want to see this range hold, right? Because we should be making lower highs, right? So here's the first lower high after reversal is formed. We should be seeing lower highs, and actually we should be seeing speed, right? Especially when 11 o'clock rolls around, right? Because now that 1 hour candle will close, right? Because we're basically trading a reversal candle. We're like anticipating it to be a reversal candle. But that's why it's a little bit riskier. Like I was saying, it's probably not A plus, right? Just considering everything, pretty low in the range, YM not super at the high. But I would say it's fine, right? Like it's fine as a trading day trade, eval trade. Like I would probably take this anyways. But that's because I'm like super aggressive with how I manage. That's why I like taking the first CSD. Because, dude, all I need for price to do is this, bro. Like, just give me a reaction off of that first CSD or first gap, or whatever I'm entering off of. Just give me a reaction off that. And I can move my stop loss already. Like, look what I did. I already moved it. So even if I take a loss, it's like a half loss. Like, who gives a shit, right? Like here, we need this gap to hold, right? And once we CSD here, now you can move your stop loss to break even, right? So either way, like even if you took this, It should be a break even regardless. Or maybe you took this CSD here. I probably wouldn't take that just because the reversal signature is not great. But if you did, you took this right here. Your stop loss should be like at this high or at this body. Now it's going to be moved to here. So again, you would take a half loss, right? Because we mitigated the order block and we traded away from it, right? We created that lower high, right? We should be expanding because like my entry stream, we don't want to be seeing, once the like price reverses, guys, we don't want to see deep retracement and expansion. That's kind of what we're doing right now. Deep retracement, like we shouldn't be returning back these areas. And the reason why I like to enter the first CSD is because when we confirm these reactions off of key levels and we have SMT, pretty much we're going to get usually a retracement or a reversal. And when you enter the first CSD, it's much more forgiving when price retraces. Like this is clearly a retracing signature at this point, right? Very slow, choppy movement after expansion into a high. That's not really what a reversal looks like. But even when it's a retracement and you're technically wrong and price goes in your direction a little bit, just to retrace back into the range, I can already start to move my stop loss. Let's go break even. Whereas if you're basically trading continuation in a retracement like this, it's not forgiving because it's not reversal, right? If for example, you enter here, bro, like off the continuation, and you're wrong about it being an actual reversal and going down here, it's harder to move your stop loss, right? You would need price to like basically do this or something like that, and then you can go break even or something like that. When I go into the first CSD, I just need a little reaction. That's it. So I personally like entering that first CC, that first gap or whatever. Here you have to enter the gap because, like I said, the CC is way too far. So this is something I probably would have taken, even though we have that YM equal highs and like the 1 hour is super large. Like the 90-minute is fine. We wait for the 90 minutes to basically open at 10:30. This is a relevant high right here. I mean, equal lows. It's good enough, you know. There's gonna be trades like this all the time, guys. It's like it's not A plus, but it's still okay to take. Right, and this is where you like de-risk. You're not risking like your regular percent probably on a trade like this. It's not the most high probable trade in the world. I personally don't risk the same amount per trade. That doesn't make any sense. Unless I'm only gonna take like A plus, absolute A plus trades, which is something that you can do. Like this is all subjective with what you want to take, right? We're not always gonna check the same trades. I'm just telling you what I probably would have taken right here. Probably would have been a break even for me, if anything. But you're gonna see it does not really play out. We just like we just consolidate basically, right? Leave these highs here, and then once we take up this high, it just rips right through it. At that point, you have 1 hour until 1400. You might as well just wait for 1400 because this candle is an expansion candle. So you're gonna see that this asset here pretty much expanded back into the daily range, or in this range here. You're gonna see that this next 1400 candle is opening up to this next to this key level, right? So if we're not gonna reverse, you know, into some key level and discounts, price wants to go to premium, right, to the next key level essentially. But we're gonna see that this asset here is retracing into the EQ of this range or into some highs. This is technically a high. It's just a higher time from gap, right? It's basically tracing into key levels, right? Well, this asset it just consolidates, right? So this is advanced premium discounts in terms of continuation. And I'm not talking about this as the advanced premium discount. I'm really talking about like this high being used, or like one of these highs being manipulated. It's going to be clean of this a lot of times, but you can see here, this asset manipulates this high. It is just a higher tip from gap, but it's still advanced premium discount. If this asset here is in just higher in the range, this asset's super low in the range. You see that? So this is advanced premium discount for continuation, and there's a big difference, right? So for example, this would be like reversal. Like this is a high that we're actually reversing from. Maybe form the high of the day or high of the week or something like that, right? Or this asset here is like EQ that range or something. This would be reversal. And in order to trade this asset, you do need a strength switch, okay? But for continuation, you don't, right? Because they're both giving continuation signatures, right? I'll explain that in a minute. So it'll look something like this, where both assets reverse, essentially. How do I mark this? Let's do this real quick. Let me make some room. Oh my gosh. All right. I'm running out of room here. So if this is the overall draw on liquidity, for example, whatever. If this is the overall draw on liquidity rate down here, and this is the reversal, anything internal to that, right, should be used for continuation, right? Like this high internal, if we start retracing here, let me redo this one. This is the overall reversal, and we start retracing. This high should be used to continue lower, right? Any key level opposing to the draw on liquidity should be used to continue lower, right? So here's the draw on liquidity. Here's a key level, right? If price creates advanced pre-discount with this high right here, like this is used as continuation. It's totally different from reversal, right? So here, they're both giving continuation signatures, right? They're both in continuation, if that makes sense, right? Whereas the other version of this asset right here is at the reversal, it's reversing, right? It's having to reverse price, right? Where this asset here, and I'll go into actually how this actually forms, like how does advanced discount even form? We'll go over this again when I drop assessing part 2, but I don't know when that's going to be. You'll also learn this as well. But anyways, yeah, this is just where this asset retraces, this asset consolidates, like low in the range. They're both continuation signatures. That's what you see right here. So there's a difference, right? This asset retracing, where are we going to cap our retracement, guys? A key level, like a gap, for example. This asset clearly consolidating, right? Indecision candle, right? They both have reasons to continue lower. No objective taken. The daily candle is also an expansion candle. Let me, of course, look at this. Let me do the right settings here. Let's do 4-hour daily. Right, obviously daily is an expansion candle. Right, so this right here is moving against that daily candle, right? And once we continue, it's just going to fill in this wick, right? So if I show you, right, it's just filling in that wick. Right, so this is just retracement. We see this fat wick right here. Because it doesn't make sense to form a reversal candle because we didn't hit anything, right? We didn't hit anything. So it's even more likely to continue because we didn't hit anything. That's how you know it's probably just a retracement. So this like the coupling move that you see, where this asset is retracing higher, this asset's really lower, right? It's just used for continuation, right? And as you can see, this candle is bullish, expansion candle. This candle's bearish, indecision candle, right? So you can obviously see that this next 1400 candle is opening up very close to this gap. So it's going to create a 2-stage PSP into the key level, right? You guys see that? So as soon as we have that, again, like I said, you don't need a strength switch, right? You don't need a strength switch if you guys didn't know that. And I didn't know if we were going to get all the way down here. I just knew that we're going to get at least a move lower to hit my trading day. I haven't taken a trade yet today. Like I said, I woke up late. So there was nothing in Asia. Like shit just expanded on all markets. Nothing really clean to me. So this is my first trade of the day, really. So I just want a trading day, which is only $150. That's all I really needed. So yeah, I just straight up took it. Like right when we CSD basically, right? The 4-hour candle is small. The hourly candle is small, right? Every single candle is basically an expansion candle. So we're pretty much good to take this. All I need to see is a reverse signature. And you get that here, right? Pretty simple. V-shaped signature there. You can pretty much take this. I just straight up like market executed basically. Put your stop loss up here. Yeah, you're pretty much good to go. And again, your RR is typically going to be above 2R, right? especially if you're trading reversals. And this is with me market executing with a pretty big stop loss. Like this is pretty large. But I just had to close around 1600 just because that's typically in prop firms cutoff. And I'll obviously go with this. I only need 150 bucks. So once price basically created this CSD, so let me show you real quick what happened here. So with this candle here, if it'll let me bar play, cool. So I didn't manage at all until this next candle opened up. Because technically right here we have this high is technically a gap high on ES. So you can really comfortably go break even when if price did this, right? And then it CSD'd here, then you can move stop loss here. Because that would be a valid like lower time frame protected entry because we hit a key level, right? And that lower time frame CSD would obviously be protected. But we just instantly expanded away like this. So notice how this asset expands away, but this asset here, let me just show you like early on in the candle. You see how this asset expanding away, and then YM is more so just consolidating. This is how you know that YM is gonna be the asset that is gonna hit this 30-minute gap. So I already knew to go break even, like as soon as we really did this, honestly. As soon as we see a seed here, right, I can pretty much just go break even automatically. Because I know that YM is going to be the one that's going to create the SMT fill, which means that NQ is not going to take out this high, right? And since they're like decoupled in the terms of premium discount, typically the asset that is manipulating, right, is going to be the most violent asset because it has a lot more room to make up compared to YM, if that makes sense. So that's why I took NQ. Again, I didn't really care if we got to these lows or not. I just needed a little reaction, right? So obviously YM got to these lows, but what's the bigger move? It's YM. Obviously it's YM, right? It's a way bigger move, than NQ just going for, or YM going from here to here. But it's not necessarily wrong to take YM at the reversal. Now this is continuation you see here. This is totally different. So you can obviously take this as well. So here you get a two-stage SMT fill. This candle is bullish, and it takes out the high on ES. It is bearish, and we do not take out that high, right? And this could be viewed as an SMT break, right? You have SMT down here. It's just a strength switch in general because this asset over here took out highs, obviously. This asset didn't, right? You're getting a strength switch, right? So it's valid to take any type of continuation up in here, right? You could take it on, let's see what's clean here. Maybe ES. You can take it on YM too. So there's a two-stage here. It happens right here. So when you get this 15 minutes closure here, so this 15-minute closure here that created the SMT fill on a 30-minute, go on NQ, and that 15-minute candle close, the high of it is a gap. So you're going to see that here. We trade into the gap, right? And we know that this candle right here is the 15-minute C2 on YM. So you see that? And we didn't take out that high, right? But NQ did take out that high to trade into the gap, right? So it's just simply like consecutive candle SMT. That's a strength switch as well. I think Freg took this. I know Freg was waiting for the SMT fill on the 30-minute. And yeah, he traded this. So it's a good trade. Good job, Freg. Obviously a V shape here, a V shape right here. Yeah, that's a good trade too. So that does give really good RR here. That's pretty damn good, right? So either one, whatever you take, you're good, bro. That ended up playing very nicely around the same time, around 1600. So either one you take, you're all good there. But yeah, man, pretty simple stuff. What else? That's pretty much it. I did think that oil was somewhat decent as well. I would have traded this asset RB because like I said, if the daily candle has expanded very largely, I want to open objective, right? So now I come to charts around like 11, or I don't know when I came to charts, like late as hell. Um, where were we at here? Yeah, so obviously this asset had already taken out objectives, right? This is the main objective right here. It's the daily swing point high that caused the retracement. Anything up here is way out of reach. So I see the daily has expanded. It's not really that interesting to me to trade a leading asset. I'd rather trade a lagging assets, right, into the same high like this, right? This is where I would take RB probably. Um, and what do you need? Ideally is a shrink switch, right? And that's what you get right here, I do believe. 11 o'clock. I just straight up did not see this. And it doesn't really matter which asset you take because, as you can see, this asset already took out the high. You see this right here? Already took it out. This asset did not. So you can scalp this asset to the same high, or you can trade this asset to this high. Whatever, dude. It doesn't matter. Let's see if there's a nice signature here. The RR is not great. I will tell you that. The RR is not amazing. For this asset, you can maybe go 2R beyond the high or something like that. What about over here? Same kind of thing, honestly. The V-shape is very nice, though. V-shape is perfect. But yeah, you're going to have to TP like a little bit beyond the high. Did I go break even? Okay, you would have got break even there anyways. What about over here? Fuck, that would have sucked. Holy shit. But that would have been valid too, to take. But that sucks. What about 5 minute? Nah, it's really the same thing. Yeah, that's the only issue with your RR not being to a draw on liquidity. Because when you hit the draw on liquidity, what can happen? A new phase of price right back to your entry. You can do these things where like maybe you don't get 2R to the draw on liquidity. Just go break even as soon as we hit the draw on liquidity because, like I said, you can get new phase of price, and you just have to extend it to our beyond the draw on liquidity. Because a lot of times, like price will do this. Well, it just will like trade beyond the draw on liquidity a little bit. Sometimes we'll trade right through it, right to your TP. But yeah, sometimes it'll just do this right back to your draw. But that's the risk you take entering so high in the range, right? So yeah, I was more so looking forward to waiting for a bigger pullback. That's what I like to wait for. So that's why I waited for NQ. Or I was just going to get no trade for the day. As simple as that. But we got it. So yeah, that's my trade today, guys. And yeah, hopefully you guys had a good week. Hopefully you guys learned a lot here. And I will catch you guys later.